to the most, as and when it's going, I think it's getting more and more interesting now. Let me introduce, let me not try to introduce actually. No need of introduction. It's like saying Amitabh Bachchan in India, but James Fry in the global markets. MA in mathematics and doctorate in economics. He is ruthless when it comes to analytics and torturing the data, and happy and completely unassuming when it comes to other aspects. He works in commodity-based sectors and is an authority on palm sector with respect to James coefficient of correlation with the fuel prices with regression analysis using linear programming and artificial intelligence. I think so. Oof. I'm just kidding. Dr. James is advisor to many companies and governments. I have two interesting episodes to offer. Once in 1998, we called him as a speaker at our company. At that time, Indonesia production was half of what Malaysia is. He showed a graph a decade and two, and that's what exactly happened. Another incident, Indonesia took over so strongly, we had no clue that that could happen. Another incident was my little chat about fuel prices. I think it was in in one of these hotels when it was $125, 2009 June or May, I think. When the Brent crude was $125, the whole world was talking about $200. He told me, we were whispering actually, and he said, "Look, Brent crude will touch $20, $30 in a year or two," and that's what has happened. And last seminar which I mentioned, he said it'll bounce back and become 45. So James, I think you have a huge responsibility now to guide the entire trade which is listening to you. Over to you, please.
Thank you very much, Sudhakar. You gathered, I am actually working together here with my colleague Jeanette, who you may be able to see, who I think actually may be the only woman speaker here, so she's doubly welcome. I should mention my grey hair is only because I worry so much about doing all of these things that you tell me I do. But anyhow, we will try to be quick. I know you have many fascinating speakers. So let's get on and we'll start with the presentation. So the very first slide, I'm just going to tell you what we're going to be talking about. We are going to be, is it up now?
Can you see my screen?
Yes.
Sure.
It's now there. Okay, great. Thanks, Jeanette. First, I'm going to talk. First of all, everyone can have a copy of this later on, so you don't need to take every word down. It'll be available to you. I believe petroleum, and Sudhakar has been very kind, it is very important, and it, in a sense, drives the whole structure of vegetable oil prices. So we're going to look at petroleum. You have to study it. We're going to study then vegetable oil prices in relation to petroleum. And then I'm going to say some things. You could spend a whole hour talking about biodiesel, but I promise you I will not. And then I'm going to come on to what has been maybe the bigger shock this time, which is what has happened to food demand. And already, Sudhakar, you introduced the hit that you have had in India. We're going to present a bit very briefly of data, palm oil exports going from Southeast Asia, China, India, EU, and also into Africa. And then I'm going to end up, I suppose, as you would hope, talking about what right now I think will happen to stocks. And Malaysian stocks are the one we follow. Everyone follows those. We don't know Indonesian stocks. And to see how this will feed through to the prices. So let us go straight on and get into the first of the slides about petroleum. Jeanette, you can lead on this.
Oh, good morning, namaskar, namaste. Thank you so much for having me. So in this particular slide, we decided to focus on the USA. They've got really good data. These are weekly numbers, and I think the most recent update.
We cannot see it yet.
Oh, is it there? It might be taking a while. Can you see that?
We can see.
Oh, okay, yeah. So
We can only see text. We cannot see the diagram.
can you see a graph in front of you?
Yeah, we can see the graph.
Yeah,
Oh,
James, I
yeah.
think here we can see.
Here
I
you
think-
go. Well, I'm glad. I have a copy, so I can see it. Okay, fine.
It might be a lag. But yeah, we particularly decided to focus on the USA. They have some very good data. These are weekly numbers, and I think the most recent was updated earlier this week. So the curves plot year-on-year changes in the USA demand for all three transport fuels. Jet fuel in particular, unsurprisingly to us, has had the biggest collapse. The commercial airline industry or aviation has come to almost a complete standstill because of the lockdown that we all know about. This is followed by gasoline and fuel ethanol. We've decided to include fuel ethanol just to show the similarity in trends with gasoline. Diesel use, mainly for heavier vehicles, has fallen less sharply, but it still is down. You can see that blue line. This has inevitably hit biodiesel sales and thus the overall demand for vegetable oils as a feedstock. And I'll hand over to James for the next slide.
Thank you. I mean, first of all, you can see demand, and it's not only US. It just happens there's really good data that you can find on the US market. In terms of production, we all have heard about the Russians and Saudis deciding to have a kind of harakiri and kill one another and drive down the price to gain, I suppose, market share. But anyhow, they are not the people who have the real... can you hear me okay? There's a message coming up, sorry. They don't really respond to prices in the way that the one key sector, US shale, does. And what I've done here for the first time is to take monthly data on the growth in US shale oil output in thousands of barrels a day and converted it into annualized by multiplying by 12. And on this diagram, I show WTI, that's the green line measured on the left-hand axis, dollars per barrel, and the right is the annualized growth in the output of shale oil. Now, world demand for petroleum, total world demand, grows by maybe nearly 1.5 million barrels a day, 1.25, 1.5. That's normal. If you look at the dark line and look on the right, when the green line, WTI, was around $60–65 per barrel, US shale oil output grew by enough to meet, even more than meet, the entire growth in world demand. US shale oil is the key swing factor. It's gone from nothing virtually to being the biggest single factor in the world crude oil market. Now, it goes up and it responds quickly, as we can see on the way down. Prices collapsed, and the latest monthly estimate, this is still an estimate, not actual, is that the decline is running at an annualized rate of over 4 million barrels per day. So the US is doing the real hard work in adjusting supply to the demand for petroleum. And what you can deduce from this, which is an important thing to bear in your mind, is when WTI gets back to $45 a barrel, which probably means Brent nearly $50, then shale oil output will stop falling. But until it gets there, it will not be growing, it will be declining. So shale should be monitored, and shale is the key factor which is keeping the crude oil market at normal times under some sort of control. Next slide, please. This leads nicely into what I always refer to as the price band. The price of Brent crude oil, which is there at the bottom, I've done it in dollars per ton, is what sets the floor for all the leading vegetable oils in Rotterdam. These are Rotterdam prices. People ask me, why do I use Rotterdam? Europe is the only place where all oils are imported. We export a little bit, but we are net importers of all the oils. And so everything competes in Europe. And you see the darkish maroon colored line is Brent crude. You see how it fell. Red is palm oil. The brownish line is sunflower oil, green is soybean, and blue is rapeseed oil. And I just did by eye a dotted line, $525 per ton above Brent, which I call the top of the price band. And it just happens to be the peak at which the spreads between vegetable oils and crude oil stop rising. The price band is there. The vegetable oils have followed crude oil down, and the price band remains a fact you have to follow. And it's one compelling reason why you have to follow crude oil prices, which we were just talking about. Next, please. If we go focusing on palm on a daily basis, these are daily prices of palm as a premium, not at the price, the premium over Brent North Sea crude oil in dollars per ton. The green line is the Rotterdam price, premium, and the red line is the FOB Belawan, FOB Sumatra premium. One thing to notice, which is intriguing, is that thanks to you in India, actually, largely to you, the red and the blue lines are very close to one another recently. The freight doesn't seem to exist between Sumatra and Rotterdam. And one compelling reason is that you, because you had the virtual lockdown on Malaysia, you are buying from Indonesia, and Indonesian palm oil has become the most expensive FOB palm oil. But the rest of the world can buy their CPO from EU or Latin America. So that's one reason why the two have come together. Another reason is I think there is definite weakness in the diesel market in Europe. And I think, therefore, there isn't so much of a pull into Europe as maybe there is at normal times. But anyhow, you can see that both Rotterdam and Sumatra FOB, the spreads have come down from the peak over Brent. But there is something else which needs to be mentioned, which is gas oil, another name for diesel. Gas oil in Europe nearly always is around $100, $110, $120 per ton, more than crude oil. It's fairly stable. But with COVID-19, with the collapse in diesel demand, you have seen that the spread between gas oil and Brent, the light blue line, has come way down. And that's very important because biodiesel doesn't compete with Brent, with crude. Biodiesel competes with gas oil. So in a way, you should be looking at the gap between the red and green lines and the blue line. Thank you. Next slide. We mustn't forget other oils. And I know you're having Gustavo going to speak from Argentina at a very early hour, and others will talk about it. So I just wanted to show this diagram now. This is the daily spreads updated to yesterday of the soft oils, the three main soft oils over palm. So this is nothing to do with Brent now. This is the spread over palm. And the green is the soy oil premium over palm in Europe. The blue is sun, and then the orangey color is the rapeseed oil. you can see, as you knew, that sun and actually soy for a while at the start of this year were very competitive against palm. And so in countries like yourselves in India, who like sunflower oil, you were a wonderful market for sun. But the big annual crop doesn't come in the Black Sea until about 3 months, 4 months time to begin. And so you're not going to be getting new supplies other than some Argentine supplies until then. And so I would say sun has been sold out, and you don't have spare sun oil. And so that has become an expensive oil and no longer competes. None of them now compete with palm. But this is important because a wider spread means that palm can, where there is substitutability, palm can buy its way back into some markets it may have lost. Next, please. These are just some words I wanted to say about biodiesel. The key point I wanted to make, and again, you can have a copy of this or later. The key point I want to make is that biodiesel demand to 99% is a policy demand. It's determined by what governments do. And they talk about mandates. And I mention here, I shouldn't, but you're the hosts, but mandates in India are often mentioned, but I've never yet heard of them being strictly enforced. You know, the governments have flexibility over mandates. Malaysia's deferred its B20 mandate. Brazil has just postponed a rise in its mandate. Indonesia has the B30, the 30% blend, but it's all based on the gap between local CPO prices and gas oil. There is a formula which is based exactly on that. And so gas oil does matter. And the problem with this is that when there's a very wide gap, it gets extremely expensive to pay for the mandate. Now, the Indonesians are talking of increasing again the export levy next month in order to fund the subsidies on biodiesel. But I could imagine that if, which I don't believe, these spreads continue, there may be a little bit of flexibility even in the Indonesian side to reduce the full impact of B30 because it's too expensive. And then finally, I mention here the US and Mr. Trump, who is torn between farmers and the petroleum industry. They have a policy for mandates in the US, but he's gone along with policies that basically remove from some petroleum refiners the requirement that they should meet the mandate. So my point is, mandates are partly political. Mandates depend also, notably in Indonesia, but even elsewhere, on how expensive it would be to meet the mandate. And so when you have a big gap between vegetable oil prices, not just palm, soybean, rapeseed, doesn't matter which it is, a big gap between vegetable oil prices and diesel, gas oil or crude oil, then mandates start to become a little bit more flexible. Demand is cut, and that pulls back the prices of vegetable oils. Next, please.
Bit of a lag. So thank you so much, James. That takes us back to me. So here we look at Indian and Chinese exports. The total Indonesian and Malaysian palm exports to China and India have a very similar trend, especially most recently. Shipments have fallen sharply to both markets throughout the first quarter, but it's said to be known that China has recovered in April, whether that has to do with them being further along their recovery after the lockdown. And in terms of the Indian, the time frame of when they will recover, I think we'll leave that one to the Indian experts to touch on that one. But yeah, so that's a comparison of them together. Now we've done something similar with Europe and Africa. The total, total of both of them. And unsurprisingly, shipments to both of these markets have also fallen during the first quarter. In the EU, you can see that blue line above there. Weak transport fuel demand has hit biodiesel consumption rather. This was on the top of weak food demand, which was only real fact in Africa. And it is quite striking to see that Africa so far has, weathered the COVID-19 storm better than other regions, which is quite interesting. Whether I'm biased because I'm from Africa or not, but it's quite an interesting dynamic that it seems to have recovered slightly better or at a better pace than what we've seen in China and India.
Thank you. Okay, and this is the last slide. I think you'll be pleased to hear. I've given you what I believe to be the facts of life. Start with crude oil, then look at how high vegetable oil prices are above crude oil. Here I show in the green line, which is measured on the left, that is the Rotterdam premium of CPO over Brent, dollars per ton. It's all to do with the price band. If you look actually at the green line, you can see in the dreadful production period after El Nino 2016, even with the tightness, the incredible tightness of the palm oil market, the premium never actually went on a monthly basis much above $400. That is the top of the price band for palm oil. That's monthly averages. The grey, the darkish grey line measured on the right is stocks in Malaysia. We use Malaysia. I mentioned earlier, it's the only one where we know the stock figures precisely. And so that's the Malaysian stocks. I hope, first of all, you agree with me that when stocks go up, the premium goes down. When stocks go down, the premium goes up. That seems to be very normal behavior. And it's logical. It's about tightness in the market. So we are right now in a period where we've had a relatively high spread, as we know, and stocks have been low, but stocks are coming up. Now, we've got already the recovery in terms of things like transport fuel from COVID-19. The thing which I am worried the world may not have taken fully into account is the full macroeconomic consequences of all of the businesses that are going to have closed, of the end. Jeanette mentioned earlier jet travel. The airline business, the aircraft business is going to have a very hard time. Hospitality, tourism, which are major sectors for many countries, they will suffer. Retail, I go through Oxford, lots of shops are not going to reopen at all. So there is going to be a shock. The real question is how big a shock and how high will stocks rise? So I show here with a dotted line an estimate I made a couple of days ago of how high they will go in Malaysia. They will go above 3 million, but previously I thought actually they might have gone a bit higher. So I've moderated it a bit. And I then logically have to forecast what will prices do? How far above Brent will they go? And that is my dashed blue line that you can see showing the premium coming down to about $100 or so per ton. So it's over to you. You must decide what crude price you believe. And I go along with, I think, what I said before. I think it will come up to 45 and higher in the final quarter. But you multiply by 7 1/3 to get dollars per ton. So you can work out what is the crude oil price, and then you must add the premium. But if you disagree with me on stocks, then you can disagree with me on the premium, but you can do those sums. So thank you very much indeed. And like I say, you're welcome to have a copy of this later. Thank you.
Thank you, James.
Thank you.
Thank you.
For taking us through this. I have questions, but we'll come back to you later in a while. I want to move on to the entirely different segment right now, and then we go back. We will have questions. I hope you can stay back on the biofuel issues related.